Nigeria is on a cliffhanger as it grapples with declining revenues, ballooning debt, high inflation, high unemployment, and an unprecedented level of multidimensional poverty. 2023 will be a defining year for Africa's largest economy as it heads to the polls to vote for a new president. The outlook for the year brings a lot of uncertainty, but there are key decisions that must be taken for Nigeria to navigate the storm. I am Yemisi Lanre-Idowu. Welcome to Nigeria Beyond 2023. In this special edition, we will be discussing the many faces of Nigeria in 2023, understanding the economics of change, a report put together and published by Proshare, Nigeria's leading financial information hub. Now, joining me to discuss the Proshare 2023 Macroeconomic Outlook Report is the Senior Economist, Impact Research, Proshare, Tosin. Thank you for always being in the studio with us, Tosin.
Thank you for having me.
Thank you for coming. Also in the studio is a female analyst. She's also with Proshare. She's an economist with Proshare, Ademidun Shogo. Thank you so much. I'm glad you're here with me today. I've always been in the middle of men, but I'm so glad that you're here today. We can float us in, right? All right, I like that confidence. So let me start this way. In that report, you stated that it's a tricky one this year because we know the elections are here. There's so much uncertainty in the land. Investors are sitting on the sideline because, yes, they will still be keeping their monies because they will be waiting to see the outcome of the elections. We know Proshare. Proshare is a reference point for many analysts, for businesses, for researchers all over the world. So with this point that you have stated, why should investors retain confidence in your report?
Okay. Thank you for having me once again. And I must say that as Proshare is a market intelligence and impact research firm that has been in existence for over 16 years now. And what we do is actually to provide, beyond the noise, to provide a research-based, data-based analysis of events across the globe. We also into the national issue, Nigeria being our host and home country. And of course, we've expanded our tentacle across the globe in Canada and the rest of them. So we looked at all of this, we put all of the issues, macroeconomic issues, and even the macro and the sectoral issues into context with data-driven analysis, all in this together. And to do this, we have special reports, we have annual reports, and of course, this is one of our annual reports, the macroeconomic outlook. And as you have stated, 2023 is a bit of a different year for Nigeria, and that's why we call the report the many faces of Nigeria in 2023. And that's what we said, understanding the economy of change, because change is going to come. Unlike the other administration that preach that kind of change, but this is a different kind of change. And so the report is set to bring the political, economic, and social issues, all of them, bring them together and understand how we can transform naturally the pain that should come from all of this issue into societal gain. And because we understand that the winner in 2023 will be those who understand this socio-economic drift that we are into, and of course those who understand the solution that will actually bring gain along all of this value chain. So that's why we set out to put all of this into the report, and it's quite detailed.
Quite detailed and interesting. You say there are different phases of the economy, of the Nigerian economy. So let's get to it. And I will start with this very first one, still with you, Tosin. And on page 37 of this report, allow me to read what that part says. And I quote, it says, with federal government debts mounting, it's a major issue, and its revenue buckling, there is palpable angst and apprehension amongst average Nigerians who anticipate higher future taxes because of the repayment burdens. But ahead of the country lie two paths, one to a scenario of high liquidity, which they call El Dorado, and the other to insolvency. So Tosin, I like that word, El Dorado, and that's what many Nigerians would want to hear. So what is the cost of taking the path to El Dorado?
Okay. We are currently in debt as a country, and of course, everybody knows that we have around the debt now, the official debt around 44 trillion, and we're looking at ways and means also hovering around 23. Now, when you add all of this together, we're projecting something around 77 trillion in debt for the country. And of course, when you look at the debt service to revenue, as of November, that is around 80.7%. And interestingly, with this current budget, if our revenue perform optimally 100%, yes, our debt service to revenue should naturally go to around 57. But of course, you know that our revenue performance has not always been 100%. It's always around 70, 71, thereabouts. So when you bring that, it tells us that we may be in for another debt this year, because I think the projection in the budget is to borrow around 11 trillion. So that's all of these people, every Nigerian is looking at it that we are all in debt, because somebody has even divided it by the population and said debt per capita. So
I mean, let's look at the figures as we have it on the screen there. We see this is not even a marginal increase.
It's not. So we have been accumulating the debt each quarter. We have been accumulating all of this debt. And of course, it's quite understandable. Even businesses are going into debt. And of course, higher cost of borrowing too. But what we are now saying is that there are two scenarios before Nigeria in 2023. Now, there is this dooming scenario of us borrowing more, and then, of course, also depending on revenue from oil that will not come, given what NNPC has become now. Or there is also this instance of taxing more, which, of course, you are inflicting pain on businesses. So there is that scenario on the other hand, but we are saying there is another scenario that is called the El Dorado. Now, it's been practiced in some climates. We have some Southeastern Asian country that have done that, open up for investment to flow in, without Saudi Arabia also do the same. And then what we are basically saying in this instance is that we don't need government to be spending so much. Like, you could generate...
Maybe I should even ask you, before I turn to that, before you talk about the cost, what is that El Dorado?
Okay, we're just using it to put it in context of El Dorado, something pleasant. Like,
what are those things we should be looking at?
Yes, those things we should be looking at,
yes,
innovative way, like that we can use to generate revenue.
Because you talked about the intangibles.
Yes, the intangible, that's what we're talking about. That let's look at it. We can actually open up our economy by issuing licenses in different sectors, as we have done in the telecommunication sector. Up till now, we're still generating money from license in the telecommunication sector. Remember, just last year, we issued license for the 5G spectrum. Again, these are also ways we can actually open up and generate revenue. Now, these are they are not long-term revenue. There are things that will come within the short to medium term. You generate revenue along that line. And we're also looking at exploring opportunity, opening up equity opportunity for foreign investors with some of these our assets.
All right.
We have all Nigerian assets that are lying idle. Let's open it for foreign investors to come and buy into it. That was what Saudi Arabia is doing with their national transformation plan. So we could also do that. And NNPC that is not working, let's allow foreign investors to come and buy equity stake in it. In that hand, governments will not be the one operating it with their inefficient.
All right. Let me hear from Ademidun. Ademidun, it's not all doom when we borrow. I mean, it's not all doom, but it sounds like a doom for Nigeria. He was talking about how we have run so much into debt, and we saw that the figures there, it kept growing at a very, very high rate. So let me come to you. One of the places where we get revenue, which is supposed to be servicing our debt, is the oil sector. Now, the removal from that report that that Proshare has put out, according to page 47, and I quote, "The removal of subsidies would result in higher fuel prices, while the devaluation of the naira would affect the price of imported food, without any significant improvement in the situation of insecurity. And on the back of last year's flash floods, a lot of issues, domestic food prices on the increase." Let's bring in the average Nigerian, the man who is living on 30,000 naira minimum wage. I'm sure he wants to hear something, a light at the end of the tunnel. He wants to see that, okay, there is hope for me. So how is this going to affect that person's households and their purchasing power?
So thank you very much for the question. I feel, yeah, it's going to really affect the household, yes, and average Nigeria, because that's what we had in 2022. We had, because of the rise in inflation, currency devaluation, and we are an importing country. So we have, that means we are importing expensive products. So the income, we had an upward review in income of an average Nigeria. That means that it's eating so much deep into their income. They have lesser money to survive on. Their purchasing power is actually dropping. So to afford a particular product, you need more money than what you need before. So it's going to affect them. Then also, we can also see the impact in terms of the poverty. According to MBS statistics that came out, that was in 2022, that the number of Nigerians that are actually multidimensionally poor is 133 million Nigerians. That's 63% of the population. That's a lot.
That's a lot.
A lot, yes. That means that a lot of Nigerians are poor. And that was actually measured not only on monetary terms alone, in terms of your health, in terms of education, the access, how they can access all these particular basic amenities. So that means that we are still going to see more people falling into the poverty net in 2023. And it might even affect them in terms of payment of your debt. You can see that, okay, when you have a particular small income, you borrowed money actually to sustain the income, then inflation is eating deep into your normal consumption. You might default, and default might lead to even more accumulation of loans, and the person is already in a financial mess. So we should see more, like in terms of welfare of Nigerians should actually fall in 2023.
I really did not even know what to say in that area, because it's a doom report you've given me about what could happen to the average Nigerian if he's not looking out of the box to fix his or her problem, if the government is not finding a solution for that person. But page 5 notes that Nigeria may need to adopt a 2-track growth approach. Well, maybe this is a solution that you guys have put together, a 2-track approach, growth approach, with an increase in manufacturing production, accompanied by a deliberate approach to internalizing the benefits. That's the El Dorado you're talking about, benefits to creative and scientific effort. So yes, we're talking about localization of production, indigenizing production. It seems that's the way, and that's what we've always talked about. Give us more, give us more details about this part.
Okay. Truly, as you said, it's not all doom. And as I said, the report is targeted at bringing an understanding of how we can turn the pain into gain, because there are actually gain in all of this. Now, what we're saying there is that the manufacturing returns is actually thinning up when you consider the cost, increasing cost of capitals and cost of operation, they're going up. So historically, we know that Africa has been concentrated on raw materials. You know, that's been the hallmark of what we do. But we're saying that it will be the greatest undoing of Africa in 2023 for you to concentrate on the lower end of what we call smile cough. Now, smile cough is just like a smile, you know, when you smile.
Yes.
So now there is the bottom aspect where we have this manufacturing, extraction, like this farming and the rest of them. But on the two other wings, we have what we call R&D, we have all these patents, we have copyright, trademarks, and on the other hand, we have this advertising, marketing, and all of that. Now, historically, what we have seen the global trend shifting is that countries that are on the two upper wing tend to benefit. Because, as I said, for us to focus on the raw materials, we'll be losing out, because definitely from basic economic theory suggests that if you are into raw materials, you will lose out value, because you'll be trading in materials that don't so much have values. Consider a country producing cocoa and a country producing beverage. Now, the one producing beverage will gain more because it's added value. Yeah, but we are even now saying that when you look at the global dynamics of things, even manufacturing, the profit is thinning out because of the cost components. But you know what countries are now doing? You can invest in R&D. You can just, all you need to do is just to have copyrights, trademark on some products, so it will be manufactured in other places, but you are getting value.
What level are we? when it comes to manufacturing, with what you have talked about?
Yes, we're actually in between the extractive and the manufacturing. But that's why we're now saying we don't need even to concentrate on that. Let's also take advantage of even our endowments in terms of what we are producing that we can actually financialize or we can have research, copyright, patent rights on. Take, for instance, this now. A report just came out recently that this bitter leaf, now they've turned it into a medical supplement abroad. Now, this is something that we have been using. Africa, we have been using. And so those ones now, they will get probably trademark or copyright on all of these, trademark specifically on this product now. And so they will be benefiting. Even if we produce it in Africa, they will get so much value from it.
And if one company gets a copyright, does that mean we can get it?
No, it depends on, except you change the model, you know, you have to, it's called copyright. He has the right to write on that
particular model.
Yeah, the same thing we're doing for our creative industry. Now, many of our musicians are going abroad, you know, but many of them set up all this music label abroad. They have our musicians, but we'll see them gaining and, you know, contributing so much to the economy abroad and not our local economy.
They localized.
Yes, so we are not saying let's localize. Let's do that manufacturing and starting what we are doing, but let's also combine it with gaining some of this R&D so that we are not losing out, because that is where the world is actually transitioning to. We have all of these things, so let's bring it up. Let's use that two-pronged approach. While we are benefiting from what we have, we are also taking advantage of the two upper hand of the smile curve.
Of the smile curve. I wish you could smile very, very soon at that. If you look at what's happening, we want that smile, right, Ademidun? Yeah, we want that smile. I hope my producer can take me back to those triggers. I need that information, the figures for the triggers, because it's at that point, I think we need to talk about the triggers. Really, it's very important because we need to know what our problem is, then we know the need before we can now create solutions, right? Ademidun, yeah. That report highlights that for households, poverty and inequality are likely to rise as unemployment is expected. In saner climes, let me use that word. If you're going to know if an economy is growing, I was talking to you about leading indicators earlier. I know GDP is a lagging indicator, but when you see that, when somebody quits his job, I mean, we don't see that in Nigeria. You just want to quit your job. Somebody else is ready to take up that job. When somebody quits his job, it means that person has another job already waiting for him. And it means that that economy is growing. But it's just so not the same here. But yes, unemployment is very critical. And at the rate that we have it now is alarming. And is expected to remain high. That's what's stated in the Proshare report. While growth is expected to occur in sectors that are not job creating. Explain this angle for us more. I'm sure many want to know why it's going to remain this way. Just before I ask you the questions. This is not a good sign. Yes. So broaden it. Let's know our problem in this regard.
Okay, we're expecting, according to the report, we expect that we have unemployment to actually worsen compared to what we had in the previous year. And that's because that in order to fight inflation, we had inflation all through 2022. Looking back at 2022, we had inflation. So the CBN had to come to a rescue by raising rates. So rate hikes actually affect both the private sector and what we have in the market currently. So the private sector have to, in terms of borrowing costs has gone higher, their operating costs has gone higher. So they have to look for ways to actually preserve their profits. And like that, they might actually do a downward review of income. Also, sometimes they might even lay off so that they can just keep into their profit. So because of that, there's more layoffs of staffs. Yes, that's what we had in 2022. I think we had the likes of, a lot of companies actually laid off, especially in the tech sector.
Even before they laid off, the Japa syndrome came into place.
We had people resigning so much. So we have a large volume of unemployed people. And because of that, we have that to continue in 2020 because we still see that rate hikes will continue and companies will private sector will continue to look for ways in which they can just keep in their costs, contain their costs.
Let me digress a little. This syndrome that we've had brain drain. Right before this. But this is even beyond brain drain.
Yes.
Anybody is leaving the country. What's the implication of that?
Okay, so yeah, we've had brain drain before. I think it was in '90s that we had
Yes.
something like that. But this one is like quite different because of the profile of the people that are actually relocating. We notice that the profile of people relocating are the skilled laborers, so that people that are professionals. So we
Yeah.
have the exodus of professionals, and that can actually affect our economy. That means that we have people that they have less knowledge, less skills to actually attend to us. Let us look at the health sector, for instance. We have doctors. Doctors have gone, a lot of doctors are gone. That means that we are left with doctors that have less qualification, not in
Even
terms of
beyond doctors, nurses. I
nurses
was
who
at the
have gone.
hospital. My dad was at the hospital for like 2 good months, and we had just 2 nurses attending to about 10 people in a ward.
So they're
Those
already
nurses
fagged
were
out.
tired.
Yes,
Exactly.
exactly. So they're already fagged out. And how do you expect them to to effectively do their duties when they have a lot of people to attend to? So that will actually affect. That means that Nigerians basically they have to like contend for the available professionals that we have, and that will actually affect the economy. That means we have less access to quality services in terms of healthcare, even in terms of the companies too. That means companies have to look for a way to retain talent. People are tripping out of the country. So the jobs are left for people that have lesser skills, and there are no people to even upskill them.
Yeah.
So you have to spend so much on upskilling the people that are actually available that have lesser skills, and also spend more to make sure that they don't even leave after you upskill them. So it's a lot.
It's a lot. Let's look at from your details here and the triggers and the trickling effect that we have had.
Okay.
It starts from socio-economic and political factors. Look at that. And from there we have different forms, and that's what's affecting Nigeria. I mean, we're just complicated as a people. Naira depreciation, NPR, subsidy, power, election is a major issue. Then look at the ripple effects that it brings on the people. So how can this be reversed? Because at the moment, even today, as I was coming to the office, I still saw the queue. There was a particular video I saw of a security man and a policeman trying to push back the people. There's a lot of fighting. People are waiting. I was just lucky to be able to withdraw yesterday as I was going home, and I was like, okay, maybe God just opened that vista for me to be able to withdraw at that moment. So we are praying, we are hoping that there is no social crisis. But how do we avert this in the short while, just before the election?
Okay, before the election, I think Naira design actually triggered, apart from the false scarcity that we had, that actually made people agitated. Yeah, the Naira design has actually
Which
fought
is still
more.
lingering.
Yes,
There's
exactly.
still so many queues for fuel.
So that's a lot in terms of people are now, even because of that, we have a parallel market for Naira, which is quite funny because how can we be trading the same currency in a particular country that is still our main currency? So we have the parallel market for against dollar, we have the parallel market against Naira. So it might actually trigger some social crisis, but I feel like they can avert that by trying to extend the dates of
the money swap.
Yes, because of the deadline, people are looking for ways in which they can actually swap the currency. There was no effective sensitization.
Well, there's an extension, but does it have any effect?
Yes, exactly. The problem is not even about the extension. The problem is about the availability of the notes. So the notes are not available. Yes, I know you're trying to contain the way we use cash. We are trying to pivot to the cashless policy. But in terms of technology, I feel like we've not gotten there yet. We have a lot of people are complaining about a lot of failed transactions.
It's very obvious because with what has happened, we can't even transfer.
Yes.
There's a difficulty in transferring.
Yes, so POS too are not working. And we have that. So I feel like it's not about, okay, if you want to extend the date, please make sure the cash are available, especially for rural areas. For us to have the severity we have in the urban centers, imagine what they have in the rural areas. Some people are not even aware that they've actually extended this particular date, essentially the deadline. So it's a lot. So I feel like, according to what my colleague said, to actually curb the problem of unemployment, that we should actually issue licenses for greenfield investment in some critical sectors. Like he said, like what we had in telecommunications, we can also do that in agriculture. So as to stimulate foreign direct investors. And when they come in, they can create more job opportunities for people. So we are not leaving only this to the role of the government alone. Private sectors can create job. Yes, for people, and it will reduce it. I'm not saying that it's totally going to erode unemployment in the country because it's quite a very large volume, but it will actually reduce it and reduce the burden on the average Nigerian.
I mean, I really want to hear your thoughts on unemployment and take India as a case study. Yeah, the population of India is also is large. But it looks like India is investing in its tech space. A lot of Indians are very techy and savvy. I don't know what they did in that area. And many of them are also migrating to other countries. But how do we tap into that energy? Many young Nigerians are on social media, but it's like they are wasting away. Really, that's how I feel. So I really want to know what India did and how probably Nigeria could adapt that. It's not a one size fit all really, but taking something from that. But I will get that after the break. You're listening to a conversation on Nigeria Beyond 2023. We'll take a break, and when we come back, we'll continue that insightful conversation. I'm glad to have you back. You're watching Nigeria Beyond 2023. We've been speaking and dissecting and discussing the Proshare 2023 Macroeconomic Outlook Report. And I've been speaking with Tosin, who is a senior economist, impact research, Proshare, as well as Ademidun, Shogo, who is also an economist with Proshare. Thank you, lady and gentleman. All right, before we went on that break, I was saying, and she talked about how we should be leveraging technology. I stand to be corrected. And I referred to the case of India, who has a large population, but of course, a larger, younger population, and how they are leveraging technology, investing that younger population with technology and all of that. Same with China. So Nigeria also has a younger population, a lot of younger population on social media, doing so many things that sometimes we don't even, yes, I know some of them are using it to work, right? How do we leverage technology in a younger population, investing in a younger population when it comes to technology? Yeah, all right. So as to avert this social crisis that we're talking about.
Yes, and truly, India has that record of a population to, investing in technology. They are leading in many of these tech companies, global tech companies, all of them, many of them, at least India is leading. But I think one of those things is that they invested so much in human capital. And that's why when I see presidential candidates that talked about investing in human capital, I tend to also favor that. Yes, because it's an investment. It's a long-term investment. That's why you'll notice also that many Indians that are going out of India are actually expats going out. And of course, that's why foreign remittance by Indians to their economy is a large component, because they've exported their expats. So that's why in our own report too, we looked at all of these issues put together, and that's why we're looking at the component for Nigeria, that how can we also benefit from the pain, as it were, of the Japa syndrome, all of this. How can we benefit, even if we have Nigerians that are so dogged about going abroad? Have we invested so much in them that we could have them in high-end places over there and not the menial job?
Some would argue that Nigeria has invested in many Nigerians that actually went abroad through brain drain and the likes. Many say that looking at the education sector, it might be very bad, but many of us paid just a meager sum to get education in Nigeria, especially when it comes to the federal universities and the likes. And you now travel abroad, and many Nigerians are not giving back to Nigeria. Yet, the government has been able to subsidize your pay while you were in school. So it seems like it's unfair.
No, the problem also is often also related to our exchange rate. There's always a problem with FX conversion in Nigeria. So it's always a discouragement, whether in attracting investors or even making remittance. People look at it that, okay, I could, when I send money to my people, they ought to get dollars and probably, go change it at the parallel market, because that will give them more naira. But of course, the issues we have to get dollar out of the banking system now. It's a trouble on its own. So all of this, when you put it together, we are not creating a financial system that could support all of these repatriations and all of them. So that again often tend to dissuade people from making all of those. And don't forget to, we have, yes, as much as we have the brain drain, people going abroad, professional people going abroad, we still have many Nigerians that just want to japa because of the japa thing. And so those ones end up at this mania job. Many of them end up they're not having homes to stay. But if you ask them, they still prefer it because they are looking back home, they are looking at the insecurity, they are looking at all of those things, and they are saying, oh, this foreign basic things are in place. So they said, oh, these foreign countries are still better. And that's why it seems we're not getting so much from it. But as I said, we looked at all of this in the report.
All right. Talking about revenue now, a lot of people are expecting that there will be succor in the Dangote refinery when it comes into full operation. It is clearly anticipated that about 650,000 barrels per day would be gotten from Dangote refinery when it's completed. And that's by 2023, half year 2023. It should have started operation early last year or this year, but we're still waiting. Now, can you share with us how this project would impact socio-economic landscape, considering the issues that we have with PMS at the moment? What's the implication for this refinery when it gets into full operation?
Okay, for the execution of the refinery, when it starts running, we're expecting that our reliance on FX will actually decline. So that means that in terms of our reserve, that's the FX reserve, it should not be burning so much as the way we had it in 2022. We had it falling below $40 billion that we had in 2021. It was dripping as low as $37 billion. So we think that if that begins, that means that we are not going to be paying Dangote in dollars in exchange for refined oil. We're going to be paying in naira. So that means that we should see a.
Is that certain?
I think that's I think it's a proposal that was actually given from NNPC to Dangote already. So I feel that should actually help.
So
it should help.
Let me look into that. The Dangote refinery, for a start, let's not assume Dangote refinery is not a recipe to get cheap fuel.
I was even going to say that because are we so sure that Dangote itself would not be exporting?
Yeah, because it's actually in the free trade zone. So there is that consideration. We shouldn't expect that. But here is the thing. We're looking at Dangote refinery. We're looking at it that it will make clear a number of things. Now, there are contentions to the value of the subsidy in the first place. So we do not expect the government to be subsidizing Dangote. So when Dangote come on board, we expect the market to then have its course the way we have been arguing. So it will provide us clarity as to what we're actually been spending on the subsidy. Again, it will bring us clarity on the volume of our domestic consumptions because government is saying around 60 plus, but we are saying that effective consumption is lower. We are not consuming up to that. How can we have risen over time, by more than 100% in consumption? So it will provide clarity on that, and it also provide clarity on this direct swap, this swap arrangement the NNPC is having, because we're arguing in that instance, we are swapping crude oil for petrol, and we're only getting petrol. And don't forget, from crude oil, there are thousands of products you can get from crude oil. So how are we exchanging crude for only petrol? Where does all the other components go to? So again, those concerns will actually be hissed out with Dangote because we know, okay, you're selling to. Okay. But of course, there is the argument of...
What are other components that Dangote plans to?
Yes, of course. He plans diesel. There are a number of things that he plans. Okay. There are diesels, all those jet fuel will also still be coming from...
Ammonia?
Yes. Those things will be coming from Dangote. So it's quite a number. I think he gave the figure to some of those things. But then, will Dangote be able to meet our domestic need? Will he give us all the domestic need? Now, don't forget that we have only 20% stake in the company. Dangote. And of course, some people have even argued that Dangote is using that as a backward integration strategy, of course, to get his own feedstock for the refinery, noting that many of the modular refineries now are complaining that they are not getting feedstock. So by having 20%, though government said it's regulatory, statutory to have 20% stake in it, but at least Dangote with that will be able to secure that.
Have we even seen any effect or effect of these modular refineries that we have?
Yes, some state have actually. Edo has modular refinery, but it just got in feedstock. So maybe they will
The
start seeing the
registered
effects.
ones, not the illegal ones?
No, the modular refineries are actually the registered one.
Okay.
There are artisanal refineries that are, those are the illegal one that, some folks just set up with fires under and just be burning fuel. So those ones are illegal. Modular refineries are those ones with capacity of less than 10,000 barrels per day. So those ones, we have it legally. You have license.
How many of them?
There are a number of them. We have DuPont, we have Edo, we have Watersmith, all of these.
Okay. Where are they largely concentrated?
Yeah, of course,
in the oil-rich
region. But of course, there are also, if you want to, even the national refineries are not concentrated in the oil-producing industry. We have one in the So whether we will get enough from Dangote refinery depend on how we are able to push our case at the board, because I think we'll be on board with our 20% stake. So those are the concerns we should be raising. But yes, we expect that it will sell it to us in Naira, which again would ease, demand for FX and the rest of them. And of course, insurance, shipping will be out of it by buying from Dangote. But as I said, we should not expect it that it will be
a major source for getting cheap fuel.
No.
All right. We took that question away from you, but that's okay. That's okay. I have this one. It's still on petroleum, and that's talking about subsidy. We cannot stop talking about subsidy. And any government that comes in, or most of them, are saying that they are going to be removing subsidy. And we also have, so many of our activities are hinged around petrol. Inflation caused by the forex exchange coming from petrol. And we have the surge in goods, in prices of goods and services and all of that. So looking at 2023, after the elections, will this still be a major risk driver?
Yes, it's going to be a major risk driver. Yeah, but although for 2023 in general, the major risk drivers are the politics, and that is the elections that is going to happen. We have inflation, we have the FX issues, and all those things that are going to be the major determinant. But excluding politics now, we're going to have to look at inflation. Inflation generally undermines investment. So that means that whatever you actually invest in, you're worse off in the future.
You can't even save.
Yes, exactly. So you can't save. And that was what we had in 2022. We had investment having negative returns. So whatever you invest, you have returns you're going to get from it is negative. So the yields were negative. We had bearish sentiment in the fixed income market. We had it slightly also in the equities market. So yes, last year. So we expect that to continue. That means that we are going to see the risk investors are going to buy. They might actually stall and actually look at the market, look at it, also look for investment that have yields that are actually higher that can mitigate the risk. And that can only come from private sector, because most of the risk investments actually have lower yields. Lower yields are quite higher than what we have in terms of inflation. As of last year, we have the bond market, 10-year bond had a yield of 13% to close 14%, and inflation was at 21.47% as of November. So it makes no sense to invest. So we had people pivoting to CPUs issued by private sectors, bonds issued by private sectors, because they had yields closer to inflation. They had yields of 19%, 18%. So we should see investment diversifying that portfolio in this time, because the risk, they have to look for a way to manage the risk, ways in which they can evade this inflation. Yes.
So let's close this discussion. She talked about this risk, and are we going to continue this way? That's the slogan that many Nigerians would use. And from your report, you say that Nigeria will see high, but gradually moderating inflation rates. You talked about the yield and how, of course, she made mention of it might not be a very good time to invest because the low return on investment and all of that. And you talked about the performance of the economy will be dedicatedly balanced on creativity. So your last word, with the elections coming, with the politics in play at the moment, what should we expect?
Okay. As a last one, let me say that, as you said, we expect, because of the rate hikes, we expect that inflation might be moderating, albeit at a lower pace. But the other challenges that she has highlighted, talking about the FX issues, will still, and of course, will keep rates, inflation still high. Businesses might still be difficult. And when you consider the election too, in fact, we did, as I said, the report also deals with the political dynamics of this year. So we looked at those politics. In fact, we did a poll, a survey of the perceptions of Nigerians on the presidential candidate.
Okay.
Which of them is likely to institute socio-economic reforms that could, that Nigerians need at this period. The reports pointed to one candidate over others, but of course we put it as it is just instructive, not so conclusive of whether this is the electability of this candidate, but at least it pointed
to... You wouldn't really want to highlight that?
Yeah, of course, it's in the report. It's in the report.
Okay, so can you just give us a brief of what that poll?
Yeah, for Peter Obi, he had around over 60% of the perception of people being the most likely candidate to institute those socio-economic reforms. And of course, coming behind him is the Bola Tinubu, Asiwaju, and then Atiku, and along that line. So, but then, as we have said, it didn't represent our own conclusions, but it pointed to what the perceptions of Nigerians are. And but again, we also looked at it that the political dynamics of this year will be different from what we have in the previous election, in the sense that as the two major candidates of the last election, they were both Muslim from the same region. And so it wasn't religion didn't matter most in terms of the decision. But this one now, interestingly, we have Christian, Muslim on the ballot. We have Hausa, Igbo, Yoruba on the ballot. You see, all of those things. So really all of these things will feed into what we are like. But we also feel actually that monetary gain is likely also to be a major determinant in all of this. As I said, all of them are actually detailed in the report. And I think we have been able to put it together on how we can understand this socio-economic dynamics that can be changed into gain rather than pain for Nigerians.
Let's hear from you. Your last word, personally now, not an economist. What do you think? What do you hope? What do you stand to gain, or how do you want Nigeria to go this year?
Okay, so with the expectation that things might actually get worse for household, for an average Nigeria, inflation are going to increase, we have unemployment rates, revenue are going to drop, your purchasing power are going to drop. I feel like I can recommend for household that they should look for ways in which they can actually they can look for a way in which they can actually increase their income net.
Yes,
so don't have to rely on one income net. Just make sure that you use multiple income nets. Look for ways to actually generate
streams
more money. So you have streams of income. You are not limited to just one income. Then the second one is that you can actually diversify your portfolio. Don't rely on just one interest rate, and try as much as possible to look at the investment. Because of the yields, don't go for them, because the risks during this period are quite high. So if you are getting attracted because of the extremely high yields, you might actually lose your money. So you should look for a way to mitigate your risk. But by tabling in, you can go for fixed income assets, you can go for equities market. Just look for a way to diversify.
I know you mentioned something about investing in dollars.
In dollars, yes, dollarized asset too.
But even in dollars, you have to cost average it.
Okay.
So you don't just if you invest in dollar now, tomorrow the naira might appreciate. So, but if you cost average it, then it will.
Okay, I guess we could end the conversation on that note. You have given your advices, and I'm sure our audiences have heard what you have said. I must say thank you so much, Ademidun Shogo, economist with Proshare. Thank you for coming on the program, and thank you, Tosin. Thank you for that insightful conversation that we have had on this program. And that's how we wrap. You're watching Nigeria Beyond 2023.